Ethereum is pumping like there's no tomorrow. So is this the beginning of a new bull market, or is this a fake breakout? Well, today we're going to look at the technical position to let us know what is the probable outcome. So if you like today's content, like, subscribe, hit the bell notification. So let's dive straight into Ethereum. Right, so Ethereum, the recent price action is this, and is making nice new highs in this range over here. We broke out above these two over here. So what is this pattern? Is it the new bull trend? And we're going to see a nice continuation to all-time new highs over the days, weeks, and months? Or is this simply just some type of corrective structure, and we're likely to see it roll over to make one more low? At this present moment, we don't know the official answer. However, what we can do is stack the probabilities in our favor with momentum. We're going to look at 2 time frame momentums, weekly and daily. We're going to look at pattern position. One of the best ways of reading the pattern of the market is Elliott waves. And we're going to look at some Fibonacci time and Fibonacci price. And by the way, the analysis that I do today on Ethereum, you can actually have an access to the exact chart. Our crypto charts, you get access to Ethereum is one of them. You'll see this on the left. This is the R15 Crypto Gym, where we do daily workouts on Solana, BNB, identifying high probability setups. You get a lot of goodies in this. You get a lot of goodies. You get a 7-day bootcamp. You go, what is this you get? Well, it's one of our new products. It's one of our new products, and you can actually access it for a 7-day trial for £1, and you get a lot of goodies, including today's analysis on Ethereum, and you can upload it, use all the settings, etc., etc. So it's a phenomenal product. We're getting some great feedback on this. So Ethereum. Okay, so let's just get a few things clear. Let's look at momentum, right? Momentum is the rate of change, and there's loads of momentum indicators. But one of my favorite by far is something called the stochastics RSI. So we're on a daily chart right now. So I'm going to jump out of this and jump into a weekly chart in the top left-hand corner. And what we see is the weekly momentum, the blue and the red line, is above this black line. And the technical term for that is overbought. Overbought, meaning that the upside should be limited over the next few weeks. Now, when I zoom out of this chart on a weekly, right, what I'm going to show you is something really profound. It's going to blow your mind. Very simple. Leonardo da Vinci says the best, right? Simplicity is the ultimate sophistication. So if we look at this high over here, made back in November, look at the weekly momentum. You see the blue line crossed below the red, and then the market moves sideways to down for a number of weeks. You see this one over here? This high was over here. The following week, the blue line crossed below the red, and guess what? The market moved sideways to down for a number of weeks, right? You see the pattern? So should we assume that the rhythm's going to change? Well, if we look at the momentum, so again, we're just going to stack the odds in our favor. So we're not just going to make a random guess of what's likely to occur. The momentum right now is in this zone, typical zone, where we typically get a bearish reversal over the next 1 week, 2 weeks, maybe this week. All it takes is one big bar to the downside, and the blue will cross below the red. That's a big clue, right? So we want to be aware of that when we're thinking, what is this movement that Ethereum is making? Is this signals of new time, all-time new highs going to be made over a period of weeks and months? Or is it simply a correction and we're going to get a movement to the downside? So this is the weekly time frame. So this is what we refer to as the higher degree time frame. Now we're going to, and you can use whatever you want as the higher degree. We're using the weekly as the higher degree time frame. We're going to now move to the lower degree time frame. On this case, it's going to be the daily chart. Right, that's where we started. So I'm going to pop this up. I'm going to jump into this chart, top right-hand corner. By the way, you can have access to all these settings. The R15 Crypto Gym is in the description link below. £1, you get access to my daily workouts. It's basically analysis, detailed analysis on Solana and BNB, some beautiful setups occurring, and all these charts as well. So with the daily, right, what's the momentum doing? Well, in a similar way with the weekly, it is overbought. Again, that's another big clue. That on a daily time frame, the upside should be limited. So the next few days, we're probably going to see sideways and then some type of reversal of downward movement. And that's going to give us a big clue on what's likely to occur next. And if we just look at this again on the daily momentum, look at these highs, this high over here with this bearish reversal. This next one was a lot cleaner and pretty much just bang on, right? Bang on over here. Right, it's what you call dual time frame momentum, a higher degree and a lower degree. So now that this one is looking like is in a position to reverse, well, what should we anticipate? Well, it's only logical, right? That at this zone somewhere here, in the next couple of days, we're probably going to see some type of local top, right? And that's going to be really revealing of what happens next. So we're going to go into a bit more detail. So, because if we can use the technical position to give us a big clue, we can be 2 steps ahead of the market, and then we can trade and be on the correct side or high probability correct side of the market to make some good profits. So now we know the momentum on the weekly and the daily is overbought, meaning that the upside potential should be limited, even though it's making nice new highs, a big bar to the upside, probably the biggest move to the upside that we've had in a long while with Ethereum, right? It's really, really positive, or it looks positive anyway. But there's some other clues that tell us the psychological mood of the buying and selling behavior. And that's effectively what price is. What drives price behavior is buying and selling human psychology, fear and greed, fear and greed. And by the way, when you join the R15 Crypto Gym, even on the bootcamp, the 7-day trial, you get the bootcamp, and I cover some of the core fundamentals, and you get this for free. Well, £1, right? £1 for 7 days. And you get access to all of these trainings. But it's just going to give you some of these rules and guidelines that you want to be aware of, because we can see these patterns unfolding. So what do I see here, right? So let's just look at this objectively. We've got this 3-wave structure here. That's the sign of a corrective structure. We've got overlapping waves, and then we've got this movement to the upside. So what does this look like? Well, typically, more often than not, markets moves in 5s and 3s. And what I'm seeing over here is a potential, if we look at the macro count, a wave A, potential wave B, and maybe a wave C, right? The big fat juicy, well, it's not that juicy, but question mark, right? Because for the whole crypto market, it's going to be positive if it does take off. But we want to put our agenda aside for a second and just go, right, can we just see what really is as opposed to what we hope is? You know, we don't want to fall into the hopium trap. Now, if the market goes above this high over here, if it breaks above this high, that'll be good confirmation that we're probably going to see new trends. But it's unlikely it's going to break this high, and we'll look into that. But if it does, doesn't mean it's impossible, then we'll take that into consideration. But if the price overlaps back into this closing range, right? If the price overlaps, that's a bad sign. That's a weakness, sign of weakness. And we want to look at that also. So what I'm going to do now is going to really, really focus. So we've got this big movement to the downside, but we're going to focus on this part of the market, right? Because if this is an ABC structure, there's a couple of things that we want to be aware of, right? Well, we're already aware of the momentum. We're now looking at the pattern. Let's just look at some price analysis, some basic price analysis. We're going to measure this wave A, because wave A's, if I can get this in, if wave A's and wave C's typically are related. They're related to each other, and they have some symmetry with each other. Normally they equal each other. So if I just measure this wave A, I'm going to do it from the far left, or so far right. Measure this wave A and project it from this wave B. The most common is 100%, and the next most common and the most extreme wave C is 1.618, right? And I'm going to keep this, sometimes it's good practice to write here a wave 1 or A, 2 or B, 3 or C. However, because we've got a really clear 3-wave structure here, this looks like a 3-wave structure, and wave 1 don't form a 3-wave structure, but wave A's can form a 3-wave structure. So that's another thing that's indicating that this is more of a correction, and we're likely to get the market to roll over. So we've got momentum saying it's likely to roll over. We've potentially got pattern saying we're likely to roll over. But let's just look at some pattern. So it's some price, which we've done already. We're going to do an external retracement also. We're just going to take this extreme of this wave A and the low of this extreme down here, and an external retracement just want to be really aware of the 1.618 external retracement. That's over here. So we're in that range already. Then last but not least, what I want to do is some time analysis. Now, the markets tend to have a rhythm, like a low to high rhythm, a low to high rhythm, a low to high rhythm, but also a high to high to high rhythm. And there's another one as well, which you might do today. So we're just going to measure the time taken for this wave A, the time taken for this wave, and the time that's likely to take for the next wave up. So I covered this in a Fibonacci time course. It's one of my advanced courses. You can purchase that if you're in the Crypto Gym. You'll see it as one of the options if you want to upskill yourself. So we're just going to measure this. We're going to project that forward. I'm going to do the same over here. Measure this, project that forward. All right, they literally overlap each other. You can see that they literally overlap. So that makes this date of the 21st of July very, very significant. Very significant indeed. We're also going to take the high to high ratio, right? Just, I know that's a mouthful, right? So basically, how long did it take for this high to this high? And then we're going to project that amount of time forward in time, right? It's called a Fibonacci time rhythm zone, right? And we get the date of the 20th of July, right? So around a couple of days or 2-3 days of sideways to up, but we're approaching this pivotal zone over here. So what we could also do, we can now drop down to a lower degree time frame. I just want to look at this. Actually, we're not going to go to a lower degree time frame. What we're going to do is, if there's a couple of factors, if a low gets exceeded like this, a swing low, that will confirm that the top is likely to have been made, especially if we overlap into this range, and then we're likely to see the market move on to a new low. Now, if it really takes off, it's a different story. But we've got a few factors now. We've got 2 time frames telling us, okay, we're likely to see a local top, right? We got pattern, ABC, telling us the same thing. We've also got Fibonacci priced 100%, the external retracement, and some of the others. So that's 3 things. And then we've got a time zone fast approaching in the next 2 days. So we want to be on high alert that we're at least going to get some type of pullback. That's going to probably be a corrective to this, or it's going to be a reversal. I'm leaning towards the reversal because of the momentum, but we always manage our position in a certain way that we can make money even if we're wrong. That's going to be really, really key and crucial. So I don't think there's anything else we need to really take. Really, the key thing is here is don't believe the hype. The fear of missing out, the fear, uncertainty, and doubt, fear and greed, hopium, all of that kind of stuff. Right now, in fact, I'm going to dive into an hourly chart. I just want to show you something. Right, if we just zoom in right away here, just going to zoom in like this. Right, this is really impulsive movements here, right? Nice impulsive movement, nice impulsive movement, nice impulsive movement, nice impulsive movement. A lot of people get caught up buying here and buying here, whereas you want to be buying down here, right? But this, because it's where it is, what we just saw on the higher degree time frames, is likely, if the price exceeds this low, as it comes back down below here and overlaps, we're likely going to see it go to a new low. That's the high probability outcome. And we always want to go with the probability. So I'm going to finish on this. So one of the key rules with Elliott Wave, in fact, let me show it to you like this. I'll show it to you like this. I'll show it to you in the bootcamp. On day 1 of the bootcamp, you get some Elliott Wave basics, the rules and guidelines. I'm just going to press play on this. I'm just going to forward it to this point. I'm going to show you something. This is the rules and guidelines. Okay, here we go. I think it's this one. No, this is not the one. There's another one. Elliott Wave basics. Basically, the rule that I wanted to show you, I think is on day 2. I think it's on day 2. I'll show you on day 2 of the bootcamp. The rule that I wanted to show you is, and why we're talking about the overlap, is here we go. The 3 rules. You get this on day 2 of the bootcamp. Okay, I'm just gonna zoom into this. Rule number 3 over here. Here we go. This is what we're looking at here. Let me just draw this here for you. Right, wave 4 cannot trade into the range of wave 1. Right. So what we've got with Ethereum is some type of movement to the upside. If it is a wave 3 of an impulsive nature, the movement to the downside should not overlap into the swing of the previous wave. Now, if I just move myself for a second, Hey, look at my face. All right, there you go. There you go. Full expression, right? Full expression. But we got this wave up, wave down, and then movement up. Basically says this wave over here, the market should not trade back into this range if it is an impulsive structure. That's what we're saying over here, right? And why that's important, and why I wanted to show it to you like this, is when we go back into the chart, let me just put myself on mute. All right, here we go. When we pop back into the chart over here, let me just pop this over here. This will be fine. Is if this is a wave 1, all right, that'll be, I know I've got it labeled as a wave A, it could be a wave 1 or A. So if we just type this here, like this for clarity, 1 or A, right, we'll put a question mark. So let's just say it was a 1. What should the market not do if it's a wave 1? Well, if this is a wave 3 and not a C, the market should not trade back into the closing range of this over here, down here. So that'll be what we call a pattern reversal signal. It's a confirmation for us to say, okay, this is not an impulsive structure. Okay, that hasn't occurred yet. So we're looking ahead of time. Another pattern reversal signal before that would be, and this is where we potentially might look for a short trade setup, is the swing low, right? This swing low. And that would also tell us, okay, this trend on the upside here is probably over. And if it takes this swing low out and then overlaps, we're likely going to see the market roll over. So let's just finish on one last thing, and then we'll call it a day for Ethereum. In this case, let's just clean this up. I'm just going to clean this up here and here. I'll leave this for now. I'm just going to make this a smaller wave count on an intermediate, just so we have it like so. Is if this is an ABC, then the wave count is likely to be some type of what looks like to be a wave 1, a wave 2, and a potential right away down to a wave 3. And this will end up being a wave 4. And that means we're going to have one more wave 5 to the downside. If that's the case, we're likely to see Ethereum. Again, I'm getting ahead of myself because we haven't got confirmation of this yet. But just to give you an indicative feel on what's likely going to occur, is more than likely we'll see Ethereum probably get down to around the $800 mark again if it rolls over. If it rolls over, too early to say, but that's my take on Ethereum. It is looking like a corrective structure. Unless it really just starts getting impulsive, I think we're going to see this over the coming days and probably sideways to down for a number of weeks. And then we'll be in a good high probability technical position to make an for this corrective structure anyway, a real nice finish to this A, B, C style correction down here. And then we'll look for a new continuation to the upside, right? That's what we're looking for on the longer term time frame. So let's see how Ethereum unfolds. So if you want to get access to this chart, you can join my R15 Crypto Gym. You'll get access for a 7-day trial for £1, and you'll get daily workouts with Solana, BNB. We literally go into detail so you can really see the technique on placing stop losses, entries, managing your position in 2 units. Just best practice. And we just do that time and time again. So if you like today's content, like, subscribe, hit the bell notification. Let's finish on a quote today from my book. It's The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. We're going to go with chapter 5. Go with chapter 5. Yeah, we'll go with chapter 5. Simplicity is the ultimate sophistication. Now, there's lots of different trading methodologies out there, but I find momentum on 2 time frames, which we looked at today, Elliott wave pattern, price on Fibonacci, and time on Fibonacci. Those 4, probably the most sophisticated, but quite simple as well, because you can apply it and see it time and time again. And it looks like, only time will tell. We're ahead of the market, so we're waiting for the market to have a move to the downside with Ethereum. If it takes out a swing low and the momentum reverses, then we can look for short trade setups. Or if we want to be safer, so wait for the price to overlap. If it does, then wait for a pullback and then look for a short trade setup. That's a safer opportunity. with higher probability of success, but it just means you get in slightly later in the market. And there's always this trade-off that you're looking to do. So there you have it. So join the Crypto Gym. See me in the Solana and BNB workout tomorrow, and I'll see you tomorrow on YouTube also. Have a good day. See you soon.